Welcome to the Transparent FX Academy. I'm Nick and I'm a top order trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is approaching a quite strong historical structure level for this market. In fact, this area was acting as previous support here. The market then broke below that zone. At that point, that previous support was turned resistance here, and now the market has broken back above the level. So this previous support that was turned resistance here is now once again acting as support here. And what we could expect is a potential retest of this previous resistance turned support, and then to see a rejection to the upside away from this level. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, there is one very important thing to keep in mind. When you have a very strong impulse and then the market starts a correction and exceeds the full correction, if you want the Fibonacci extensions to identify potential support areas, what you have to do is take your Fibonacci on the previous leg. Now, in this case, the previous leg would be from this high to this low, which gives us a essentially minus 0.272 retrace extension, in this case Fibonacci extension, down to this level. And what we can see is that this level is perfectly aligned with this big zone of previous weekly support, turn resistance here and again here and again here, which now that the market is approaching it from above is once again acting as support. And if we look a little better at the structure that we have, we can see how actually all this area is quite strong support. In fact, we can see how exactly from here all these previous rejections to the upside were created, then the ones that we have just identified to the downside here. Then we had the break above the zone, and from here the market created this move to the upside, and at the moment the market is currently approaching the exact same level, from which there is definitely the possibility to see a potential rejection to the upside, away from this confluence of support that we have here from a weekly standpoint. Dropping down on the daily time frame, what do we see? Now, here on the daily, we can see that in creating this move to the downside, the market has also currently created this overextended M pattern. And in general, after the creation of an overextended M pattern, what you would expect is a potential rejection to the upside for the market to complete the pattern with a correction to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg would be from this high to this low, meaning that we have good probabilities of getting a potential rejection to the upside for the market to complete the overextended M pattern with a move to the upside to this first upside target. So there is the possibility inside of the support area that we have just identified, the confluence of support area that we have just identified, to get a potential rejection to the upside, completing this overextended M pattern. Now, let's go and see what is going on when it comes to the commitment of traders, the COT data, so essentially what hedge funds and the big players in the market are doing precisely on the NZD. Now, what we can see is that with the last reports, we went from having minus 19.6k net positions all the way up to having minus 2.8k net positions. Now, this shows a strong increase of the net positioning, making the NZD stronger. And a strong NZD means actually that we have a strong NZDUSD, because all currencies on the spot are traded against the USD. So this means that essentially institutions have been increasing longs and decreasing shorts on NZDUSD. In fact, we went from having 7.9k longs from an institutional perspective all the way up to having 14.5k longs, and shorts got decreased from 29.7k all the way down to 17.4k. So institutions clearly have been moving to the bullish side for the NZD, meaning to the bullish side for NZDUSD, making it stronger. So moving back to the technical side of this market, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect in a situation like this is that if this market would shift from an intraday bearish market to an intraday bullish market, at that point, I would expect a potential move higher for the market to retrace at least to the 0.32 of the Fibonacci taken on this daily impulse leg. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you will have the possibility to gain access to the most complete, all-inclusive mentorship program. And in this program, you have the possibility to gain access to all my trading courses, the COT data software, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me. And if you continue to scroll down on the website past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.